Hi, good morning, everyone. It's Louisa. It's Monday, February the 23rd. It's No News Monday. So we are anticipating volatility and at the 9:30 candle. This morning, I'm going to take you through a trade that I took. 250 points and 11 RR. It was very straightforward. It's my same entry model. It's a smart money reversal after manipulation occurs. I use time macros. Time always comes first for me, time before price. So let's take it's overnight in Asia and London is a precursor or kind of a sneak peek into what a trader can anticipate for the New York Open. We can see that when price opened last night, I want to make sure that my cursor is working here. There we go. When price opened yesterday at 6 p.m., price dropped, and then in Asia continued to drop all the way down into this 5-minute BISI. I want to just show you so that you can understand the framework on my charts here. When we had this big move up on Friday, the 20th of February, we had a big move up and then we had price come down. Once you put your inverted fair value gaps or your SIBIs onto your chart, you'll be able to follow and see exactly where Asia came down into. Asia came down into both these rebalanced price here on the sell side, and then came into this 5-minute BISI here, which was created by price movement on the sell side. So we had a sell side imbalance, price came down, and redelivered price on the, excuse me, price came up on the buy side, creating an imbalance. And last night when Asia came down into this 5-minute BISI here, we redelivered price on the sell side. Overnight, we had London move up, but we could see from London's movement that uh, it lacked in force, it lacked in acceleration. It was a bit of a weak movement because it did not take out Asia high. So this morning, when New York AM opened, we can see that price had kind of come down. We had some price distortion here, but as soon as price opened at 9:30, I'll make my chart a little bit larger here for you to see, we immediately had this move up, this very strong directional move up, and we took out London high. In fact, the move was so strong, so directional, we tapped into this key level, which is the new week opening gap from February the 22nd. You can get these, get the indicator to put these on your chart so that they're nice and easy, and then you'll just have them on your chart. You don't have to worry about them. So we can see at that time we had an SMT. And that is one of our key characteristics of a smart money reversal is I am looking for a purge of liquidity in a higher time frame area with a change in the state of delivery and an SMT. If we look over here on the left, I have my ES chart up and you can see that price, let's go down to the 2-minute here just to give us a better view here. We can see here on the 2-minute. Let's even go to a 1-minute because I think we can see it just even better here. Second. We can see here that ES and NQ had a divergence. So what do I mean by that? ES made a high. We put in a higher high, and we can see that NQ failed to put in. We put in a higher high on NQ and then failed here to put in a higher. So this created a divergence. So once this divergence was in and I waited for the macro, I always trade time first. It's always time and then price. So once price made this high, we failed here to make a higher high. This becomes a mitigation block right here. Now, unfortunately, on the 1-minute, we can't see this mitigation block, but if you were on the 30 minutes, 30 seconds, or 15 seconds, you would be able to see it. I've been trading this model for such a while now that I know it's there on the 15-second or 30-second. With that, price displaces down with volatility. It's a beautiful displacement down. So I entered the trade here where this little red thing is here. And you didn't need to take the trade here. What you could do is wait for the next level of distribution, which is price through its displacement created this SIBI. When price comes back into this area here, you could enter the trade here. You could even enter the trade here. So there's multiple places to enter the trade once you are firm in your mind what your A to B is. And what do I mean by A to B? I mean that this here is A. It means my point of interest. Point of interest. When we decide to enter a trade, we not only need our point of interest, but we also need, just make this a bit bigger for you guys. We need a terminus. So where is price going? So we need a point of interest and then our terminus being Asia low or potentially previous day low. So enter the trade here. I took my first position off here and price comes back up into the SIBI and then just particularly sells off. Now I had to go through two macros. The first macro was 9:45 to 10:15 and then there was some price distortion. Let's just see where that started. So 10:15 is here. So we went through some price distortion. And then when the next macro started at 10:45 right here, then price just sold off really, really quickly, which is anticipated in a macro. IPTA, which is just a fancy word for the basically smart money. And we can anticipate nice strong price movement once price enters a macro. And of course, price went down to previous day low and I exited here. I was hoping maybe to come down to the previous week low, but you know what? I can be content with enough. That's 250 points and an 11 RR on a no news Monday. So I'm quite content with that. Over here on the right, you'll see that I have embedded into my chart the 1 hour chart and the 4 hour chart. And this is a key principle here for my style of trading. I like to watch the 10 a.m. or the 2 p.m. 4-hour candle open. If we're anticipating that price is going to go lower, it needs to go higher first. And so how price moves is open, high, low, close. Once this candle opened, it moved up and then it started its distribution phase. So this portion of the candle is this portion of price action on the 1 minute. And all one needs to do is get in on the manipulation. And here is the manipulation this morning. And then just ride the distribution out, take profit, and move to the side and wait for your next trading opportunity. So if you like this video and you'd like to see me make more of these videos, if you could please hit like, share, and subscribe. I will put into the description of this video a very helpful video by a YouTuber that I like immensely, and the video is on balanced price ranges. So if you need a little bit of help, a little more information on how to read price and what a balanced price range is, then this video will be very helpful for you to follow. So I'm going to put that in the description of the video. And thanks for joining me again today, guys. Happy to start the week with an 11.5 RR and look forward to trading with you for the rest of the week. Okay, guys, peace out. Bye for now.